Based on the last year and a half we've had in the market, from the drastic drop to the rapid recovery, I really wanted to spend some time today talking about reallocation, what it is, and why it's important in your portfolio. But before we can talk about reallocating your portfolio, we need to talk about what asset allocation is. So in simple terms, asset allocation is just how you have stuff in your portfolio spread out between all the different asset classes. I know if some of you have investment statements, you're probably used to seeing the pie chart full of colors that represents where all of your investments are. For simplicity's sake, today we're just going to do a simple 4-quadrant pie with 25% in each to represent just a general diversification in the portfolio. And you can think of your portfolio like you would have your doctor talk to you about a salad. The more color in the salad, the healthier it is for you. When you're looking at diversification, the more diversification, the better it is for your portfolio. So that is asset allocation, where everything is. Rebalancing is making sure that every once in a while you look at your portfolio and bring everything back into alignment. As these pieces of the pie either grow or shrink, taking up bigger portions of the overall pie, every once in a while you want to look at your pie and readjust everything back to what you originally had it set for. A good reason for this is taking last year into example. We had the massive drop in the market there early on. So you were going to see things like your large cap stock, which will be this black one, really shrink as the market fell. And then your bonds or your fixed income that are meant to be more stable ended up taking over that portion of the pie. So now when we look at the bottom of the drop there, now instead of having 25% everywhere, the bonds took up a bigger portion of your portfolio. So you're actually a little bit more conservative than you might have thought. But when we turn around and then have the rapid recovery we've had over the last 12 months or so, the flip side happened. Those large cap growth stocks that are in that black really took off and have been really what's driving most of that recovery. And so now the black, your large growth stock, has taken up a majority of your portfolio and has even eaten into things like the international, to where really, if you haven't touched anything, that's now 50% of your portfolio instead of 25%. And now you may be a lot more aggressive than you intended to be. It's even more important when you look at, say, 5 years earlier. If you did 25% into each thing in 2015, because we basically have had a straight shot up from 2015 to the correction in 2020, your portfolio may have been way out of whack. And look, in something like this where you have 50% in your US equity and you're taking on a lot more risk than you intended to. So when you had that massive correction to start off, you experienced a lot more of a drop in the portfolio than you may have ever intended. You may have intended it to be a lot lower drop, but because you're holding that much in equity, I mean, you saw a huge increase in the risk that you were taking on there. So it's important every once in a while, quarterly, at least yearly, just to look at what your allocation's at and see if you need to rebalance, see if you need to bring everything back into alignment to where now your pie is the 25% and back where everything is supposed to be, so that you know your portfolio is doing what you have it built for and is going along with your goals and your risk tolerance. Y'all have a good one.